Hello and welcome everyone to the Commodity Report for the 30th of June 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So firstly, in the last week, we have seen hedge funds and money managers. They've increased their net long positions on gold, on silver, and platinum. The strategy still remains the same here. We are looking to be buyers of platinum sub $900 per ounce. We're looking to be buyers of gold back down towards that 1800 zone. And of course on silver down towards 2050 and $20 per ounce. And what we're seeing at the moment is exactly as we discussed with you previously, end of month profit taking, end of quarter profit taking, and we're also 6 months through the year as well. So you're going to see squaring up of portfolios, and then as you go into July, Friday the 1st of July, you're going to see fresh capital come back into the market for a new quarter, for the second half of the year, to kickstart the next cycle as you move into Q3. So I would absolutely look at opportunities here as we do get pullbacks back down towards the lower end of the ranges here. We are looking at accumulating further exposure. Now, over the course of this week, we took the opportunity on both natural gas and also crude oil to bank over 1,500 points profit. So earlier this week, we had a spike higher on natural gas, banked a quick 500 points profit. Also just yesterday on oil, we had a spike out to $114 per barrel. As we mentioned with you last week, we got into oil with our clients at the Gold and Silver Club at $103.85 per barrel. Yesterday, with the spike out to $114 per barrel, we were able to bank 1,000 points profit. That's from a trade that was executed on Friday. We banked profits on the Wednesday. So just within 3 days, 1,000-point breakout to the upside there for oil. Natural gas, of course, as well, also over a 500-point move in our favour. Platinum at the beginning of the week broke out over 300 points to the upside as well. And it really is a trader's market right now. Take advantage of this range bound volatility that we're in right now, but don't get complacent. When you get big pops to the upside like we've seen on oil, 1,000-point move in 3 days, make sure you're locking in some of those profits, because you can lock in at the highs and then reload lower yet again. We're seeing exactly that playbook throughout the whole of the last month of June play out time and time again with gold. Each time we've been buying back down towards that 1815, 1820 zone. We're seeing 2, 3, 4, 500-point breakouts to the upside, lock in profits, then reload yet again, repeat the process. It's been like this every single week over the month of June. You can also do similar on other metals where we've been waiting for the price to come back down to areas of liquidity. We've been very patient here, waiting for platinum to finally drop below $900 per ounce. Very patient on silver, waiting for it to come back down towards $20.50 per ounce. Then as we go into next week, a few other points to be mindful of. Again, it's a trader's market at the moment. This is where you can capitalize massively on the current range bound price action. Many commodities we're trading, they're moving within 1,000-point ranges week to week here. And very simply, you can sniper in at the lows, bank on the pumps to the upside when you do get those 3-day impulse moves, and then essentially you can get flat, reload again, repeat the process, and essentially as a trader you'll do extremely well by doing that in commodities. Now going into next week, there are other points to be aware of as well. So of course we're moving into a new quarter, we're moving into the second half of the year, but we also have a public holiday in the USA on Monday. So you're going to see thinner liquidity in the markets. Often this can cause exaggerated moves in the markets following through to Tuesday. I would look out for that. And then Friday we have non-farm payroll, and then we also have the minutes of the FOMC statement next week as well. So all of this can create that volatility, but as we go past all of those news items, I'm expecting a new cycle to take place with commodities. I can see already that many hedge funds are positioning themselves on the long side to capitalize on the third quarter of 2022. As I mentioned on Tuesday, nothing has fundamentally changed here. We still have supply chain issues. Many commodities are underinvested. You've got undersupply. We have inflation running at 40-year highs. Central banks around the world in a race to increase interest rates. And of course, we're heading into a global recession. So there's really never been a better time to learn how to trade the markets correctly and focus too on the right asset class. If you've seen cryptocurrencies today, yet again, we have Bitcoin breaking back below 19,000. Many altcoins and crypto tokens, they've broken down over 95% in 2022. Equity markets have moved into a bear market. They're down over 30% in 2022. If you look at the Nasdaq, S&P 500 is back under pressure here as well. We have currencies versus the dollar all breaking down as the dollar index broke out to 20-year highs over the last quarter. So multiple currencies are all trading at multi-year and multi-month lows against the US dollar, whereas commodities have been the best performing asset of 2022, and we're only getting started. We're only 6 months through the year, and you have a massive opportunity here to upskill and get ready for the next phase of this cycle as you go into Q3 and Q4. Typically, July, August, and September, they are some of the most profitable months for the commodity markets. And of course, you don't want to be utilizing outdated technical analysis or gimmicky technical indicators or outdated strategy in these market conditions. We're in 2022 now. You need to evolve your trading process to utilize data, statistics, market intelligence. Be aware of the capital flows in the market, the intermarket correlations, the ratios in the market. Further combine that with the daily, the weekly, the monthly, the quarterly cycles for each commodity, and of course, learn and understand the macroeconomics, the fundamentals, the geopolitics, the supply and demand for each commodity, and then of course, layer in how the hedge funds, money managers, banks, and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program. A final note, we're now 6 months through the year. The next commodity report, that is going to be on Tuesday, the 12th of July. We've been inundated with applications at the Gold and Silver Club. So many of you have been in touch, which is absolutely fantastic. Enrollments will be restarting from Tuesday, the 12th of July. There won't be a commodity report this weekend. Next week as well, gold asset of the day, and also Thursday's commodity report. They will be on pause next week, and we will be doing new enrollments again from Tuesday, the 12th of July. So I wish you all a fantastic week. Good trading as we head into a new quarter, into the second half of the year. And I look forward to see you back here from Tuesday, the 12th of July.